Good morning, everyone. You're very welcome to today's webinar. We just completed a sound check there a few minutes ago for the few people that had logged in early, so I know we're okay for sound. It is possible to increase the volume on your computer, or if you're using your phone, it should be possible as well if you're having any difficulty hearing us. Okay, so let's get started. So first up today we have Paul Byrne, who is the Managing Director here at BrightPay. After qualifying as a chartered accountant, Paul went on to set up and manage his own accounting practice before moving into the software world. So we now provide quality software products and excellent customer service to over 100,000 businesses across the UK and Ireland. Today, Paul will discuss new employers and their auto-enrolment obligations. I'm delighted to welcome our guest speaker today, who is John Hale from Nest. John is a senior account manager at Nest. I'm sure at this stage you're all aware that Nest is the workplace pension that was set up by the government, and currently a whopping 466,000 employers are using Nest as their workplace pension scheme. So today John will present Nest helping make auto-enrolment work for you. Today's webinar is CPD accredited, and you can benefit from 1.5 CPD points. If you would like a CPD cert, please fill in the survey at the end of the webinar and we will send out the certs within the next few days. You're quite welcome to type in any questions you may have throughout the webinar. On your control panel on the right hand side there's a little question tab, and we'll have a Q&A session at the end, and we'll try to get through as many questions as we can with both Paul and John. We're recording today's session, so we'll also send on a recording of the webinar afterwards. Okay, so I'll now pass you over to the lovely Paul Byrne. Take it away there, Paul.
Oh, thank you very much, Karen. And hi everyone, and thanks for joining us today. Just a small bit about myself before we start off. As Karen said, my background is as a practicing accountant. I started my own practice back in the 80s and eventually grew to a 3-partner practice with 10 staff. While in practice, I provided payroll bureau services for, I'd say, about 30 clients, so I have some idea what it is like in the front line. In 1992, I got into payroll software development. Yes, that's how old I am. Eventually, I escaped from practice and began working in software development full-time. About 6 years ago, we introduced BrightPay and Bright Contracts in both the UK and Ireland. Last year, we released our most recent product, BrightPay Connect, which is an add-on to BrightPay Payroll. This is an automatic cloud backup and self-service portal for bureaus, their clients, and their clients' employees. And as Karen said, today over 100,000 employers across the UK and Ireland use our products, and this is a figure we hope to improve on every year. So here is the agenda for today. Firstly, we have an introduction to auto-enrolment. I'm basically probably telling you what you already know. We then cover auto-enrolment for new employers and the new rules around that. What is the auto-enrolment duty start date? What are a recap of the steps to comply with auto-enrolment, and then finally the software solutions that you would use for auto-enrolment. Okay, as I assume you already know, automatic enrolment means that all employers in the UK will need to enrol eligible employees into a workplace pension scheme and contribute to that pension. Since the rollout of auto-enrolment began in 2012, all employers have had a staging date which kickstarts their employer responsibilities. Auto-enrolment staging dates have been distributed over a 6-year period, starting with larger employers in October 2012 and ending with micro-employers this year. Through correspondence sent by the Pensions Regulator, employers have been aware of their staging date months before their auto-enrolment responsibilities were to begin. Employers who set up a new PAYE scheme during the auto-enrolment rollout, that is between the 1st of April 2012 and 30th of September 2017, are the next employers to reach their staging date. These employers have reached or will reach their staging date between May 2017 and February 2018. So by February next year, all employers will be required to offer workplace pension schemes to employees. However, there is an issue for new employers who commence employment after the staging date profile that we just looked at. Although the rollout of staging dates does not end until February 2018, from October this year, all new employers will be affected by auto-enrolment and they won't have staging dates to work from. So from the 1st of October this year, new employers will be expected to comply with their AE duties as soon as they hire their first employee. New employers will no longer be allocated a staging date in advance by the Pensions Regulator. Instead, they will need to comply with auto-enrolment on the day in which the PAYE income is first payable for any worker, except that is for single director companies. This will work similar to the way that new employers are expected to deal with tax and national insurance from the outset. If a client becomes a new employer after the 1st of October, as I said before, they will not have a staging date. Instead, they will have a duty start date. This is the day that the first member of staff starts work. And as I preface that all the time, that's except for single director companies. Your client should be ready to comply with their legal auto-enrolment duties as soon as the first employee begins employment. Worryingly, according to research conducted by the Pensions Regulator, almost half of accountants did not know that new employers would have auto-enrolment duties. So this is something we need to do for CPD accreditation, and just to make sure you're all paying attention, we have a quick poll. After the 1st of October this year, when will new employers have auto-enrolment responsibilities? Is it A, the employer will receive a staging date from the Pensions Regulator, B, as soon as the first employee commences employment, or C, at the start of the next tax year? So you just type in either A, B, or C into the control panel there on your right-hand side. Okay, I can see that everyone is paying attention. 100% answered that correctly, and of course the answer was B, as soon as the first employee commences employment. Moving on now to the steps to comply for new employers. Where your client is a new employer and about to employ someone for the first time, they will need to complete certain tasks in preparation for auto-enrolment. Once they have registered as an employee with HMRC, you or your client will need to inform the Pensions Regulator of the chosen point of contact for auto-enrolment. The new employer will also be required to choose a pension scheme that will be suitable to their business and employees. On the first pay date after the duty start date, similar to staging, all employees must be assessed to determine whether or not they need to be automatically enrolled into a pension scheme. Any eligible employees must be automatically enrolled into a qualifying auto-enrolment pension scheme where the employer must also make contributions to the pension pot. I say that's with the exception of where you're using postponement. Employer and employee pension contributions must meet the minimum contribution amounts. Currently, minimum contribution rates are 2%, amounting to a minimum 1%, accounting for a minimum 1% employer contribution. However, these rates are due to increase over the coming years. There are two stages to the increase in minimum contributions, which has been described as phasing. The first increase is planned for April 2018, and the second increase will begin in April 2019. So on the 6th of April 2018, the minimum total contribution towards an employee pension scheme will increase from 2% to 5%. New employers who reach their duty start date on or after the 6th of April 2018 will immediately be required to comply and implement the total minimum 5% contribution rate. After the 6th of April 2018, new employers will need to pay a minimum 2% minimum employer contribution. Eligible employees will need to pay a 3% contribution rate. Employers may choose to pay the total minimum contribution of 5% if they so wish. In this case, the employee would not be obliged to pay the staff contribution. And this is what will happen with salary sacrifice arrangements, and these arrangements will become much more popular as the rates increase. Minimum contributions will undergo further increases in April 2019, with the total minimum contribution rate increasing to 8%. That's representing a minimum 3% employer and 5% employee contribution. Again, new employers who reach their duty start date on or after the 6th of April 2019 will need to immediately implement a total of 8% contribution rates. It is the employer's responsibility to make sure that they are prepared for these new contribution levels. The new levels, of course, will be largely automated within payroll software. Along with being enrolled into the pension scheme, all employees must receive communications informing them how auto-enrollment will affect them, regardless of whether or not they need to be enrolled. This communication must be sent within 6 weeks of the staging date or the duty start date. There is still the option to postpone one or multiple employees for up to 3 months. If this is the case, bear in mind that a postponement communication is also required. Once the postponement period has passed, the employer will need to reassess postponed employees and enroll eligible job holders into a pension scheme. Postponing employees will give new employers additional time to prepare for auto-enrollment. Please note that if an employer postpones an employee, the employee still has the right to opt into the pension scheme during the postponement period. Another point of note, I think I've said this already, is that the postponement communication must issue, and that must issue within 6 weeks of the duty start date. It just doesn't end at staging. There will be a number of ongoing AE duties required each pay period, including assessing all employees, enrolling employees who have become eligible, handling any opt-in and opt-out requests, calculating relevant employer and employee pension deductions, sending enrolment and contribution files to the pension provider, and making the payment to the pension provider. Employers must also remember to complete the declaration of compliance within 5 months of their duty start date, and this will inform the Pensions Regulator that they have fully complied with auto-enrolment. Finally, every 3 years, employers must put certain members of staff back into an auto-enrolment pension scheme. This is called automatic re-enrolment. An employer can decide on the re-enrolment date from a 6-month window, which falls 3 months either side of the 3rd anniversary of the staging date or duty start date. An employer's duties will vary depending on whether or not employees need to be re-enrolled. Either way, you need to complete a re-declaration of compliance within 5 months to inform the Pensions Regulator that you have met your auto-enrolment duties. For new employers or bureaus acting on their behalf, completing auto-enrolment duties can seem like a lot of work. Fortunately, it does not have to be as difficult as it seems. Some payroll software solutions allow employers to simplify and automate AE tasks. It is not a legal requirement to use software to process auto-enrolment. However, both HMRC and the Pensions Regulator recommend that employers utilize payroll software that supports the process of auto-enrolment. It is advisable that the payroll is also integrated with the chosen pension provider. Employers who use HMRC basic PY tools will be one of the most at-risk groups for auto-enrolment non-compliance, as the tool does not properly support auto-enrolment. Assessing the workforce and calculating contributions manually will lead to an additional workload and a higher risk of auto-enrolment non-compliance. Some payroll software, such as BrightPay, allows employers to seamlessly process auto-enrolment with minimal workload and minimal knowledge. Furthermore, some systems that offer payroll and pension integration will make the process even more seamless and automated. On the first payday after the duty start date, BrightPay will automatically assess employees and inform the user of the duties that need to be performed. Enrolling employees is seamless and communications are automatically prepared, ready to print, email or export to PDF. BrightPay will continuously assess employees in the background each pay period and notify you if an employee becomes an eligible job holder. BrightPay has also introduced API payroll and pension integration with Aviva, Nest and Smart Pension. So we're now going to just take a few minutes to show you how easy auto-enrollment can be with BrightPay. So I'm going to pass you over to Vicky, who is our UK support specialist. Thank you, Vicky.
Thanks, Paul. Good morning, everybody. So here we just have our BrightPay software on screen. So the starting point in BrightPay is to first establish what your due to start date is. And if you are unsure, we have built in a number of workflows which can help you determine what the due to start date actually is. I'm here in my payroll screen at the moment. If I just select an employee, so if BrightPay detects that you don't actually have a due to start date entered, it's going to alert you to this fact. So you can see my yellow alert there at the top here. This will just prompt me to click on enter due to start date. And what this is going to do is bring me through to various options that I can select. So you can see here I have 3 options, and it's basically just choosing the option relevant to the employer. So the first one is I have been employing staff since before October 2017. Second option is my first staff member has started or will start on or after the 1st of October 2017. Or if you're exempt from auto-enrollment, single director company, for example, you can select that option as well. I'm just going to want to show you the options then if you select the first option. So I have been employing staff since before October 2017. Again, this will drill down into more options for you. So what you can do is use connect to the Pensions Regulator's website to retrieve your due to start date. That's going to use your POAE reference number that you have entered in the software to retrieve that for you. If you do know what it is, you can use the option to manually enter it yourself. And if you are still unsure, you can choose the third option. I don't know my due to start date, and my first staff member has started on or after the 2nd of April. So if I click on this option here, again, you've another 2 drill downs. So you just need to select then whether your staff member has started between April or June, or between July and September. And just to show you here, if I choose this second option here, BrightPay will then tell you what your due to start date is. So it's telling me here in this example, it will be the 1st of February 2018. I'm just going to click back here. In my particular company today, all my employees have a start date of the 2nd of October. So the option I would be selecting here if I'm unsure would be my first staff member has started on or after the 1st of October 2017. Okay, it's now prompting me that my due to start date is when my first member of staff starts. So I'm happy with that. So I'm going to click on Save Changes. And this then gives me a field where I can enter the start date of my first member of staff. So I'm just going to type in the 2nd of October here, okay, and save the change. Okay, so that means then when I go to process my payroll and I'm in that pay period in which that date falls, BrightPay will kick in with my AE duties for me. The second step then is to then enter details of your pension scheme. And if you have these details in advance of your due to start date, you can simply go ahead and enter them in BrightPay. To do that, I'm going to click on Add New Scheme here in the Pensions utility. You'll see here on the screen we're currently compatible with 18 pension providers. By that, it basically means that BrightPay can produce all the relevant pension files that all these pension providers need for upload, so they're in the right format for you. If you're with a pension provider that we don't cover specifically, then you can always use the other automatic enrolment scheme option to set up the pension scheme in another way there. So I'm going to use Nest as our example. So I'm just going to choose Nest from the listing. I just need to then enter the information it's asking me for. So Nest have an employer reference, and I fill that in here. And all this information would be available from your Nest account. And then my next step then is just to pop into the group tab here. and just set up the details of the groups that I have set up within my Nest account. So for example, I may have set up a group called Weekly for my weekly employees, for example. So I'm going to type that in. I suppose we should just point out here as well, with Nest, you do have to kind of mirror image everything you've done in your Nest account. So taking note of capital letters and your upper and lower casing and things like that. So just make sure everything's entered exactly in BrightPay as it is in your Nest account. Also, at the time of entering your group details here, you then just need to select the contribution rates that will be in operation. Again, you have a few choices in the drop-down listing here. So to use phased minimum, for example, to go straight to the 2019 minimum contribution rates, or to use custom contribution rates, or if you would like to actually use a fixed amount each pay period rather than a percentage, that can be used as well. I'm just going to stick to the minimum contribution rates here today. Also as well, you're just asked to let BrightPay know what your earnings basis is. So if you're operating using the standard qualifying earnings, of course, just leave that as your selection. Or if not, you can customize these qualifying earnings. And again, if you're taking your pension contribution from the full wage, then you can remove limits here and save the change. Okay, so again, I'll just keep it as the defaults here for you. If you have more than one group set up in your Nest account, then you just have to repeat that process. And all I would do there is click on Add Group and add details of that second group and so forth. Okay, and then save the change. So just returning to my payroll screen. So my employees all have a start date of the 2nd of October, and I'm in week ending the 7th of October. So you can see now that BrightPay has detected that my due to start date is kicking in, basically, and I'm getting these flags and alerts on all of my employees. BrightPay will automatically assess your employees for you. So it's looking at their pay and their age, and is prompting you as to which worker category they're falling into. My first employee is being assessed as an eligible job holder, and all I need to do is click on View Options here, and it will take me through to the 3 options that are available for this worker category. So I can enroll the employee, I can postpone them, or mark as exempt if that were applicable. So I'm going to enroll my first employee here. I'm simply going to click the Enroll button. I'm happy with my enrollment date there, and I'm going to click on Scheme and select the group I want to pop her into. So she's a weekly member of staff. So I'm going to choose Weekly here. Nest Operate Relief at Source. So I'm just going to make sure that that is the option selected there. I have a choice here, so I can just press Continue just to enroll that one employee. Or if I have a number of employees that are all going into that group and all have the same tax relief, then I can click the option to enroll multiple employees with these settings. So I'm going to enroll all 5 of my eligible job holders all at the same time, select them all, click on Enroll Selected, and those 5 are now enrolled into the Nest scheme. BrightPay will also then automatically produce the necessary communication letter that is now required to go to the employees that have been enrolled. So all you need to do now to produce that communication, so the enrollment letter, is to click on the letter option here. And all the enrollment letters, they can either be printed, they can be exported to PDF, or they can be emailed directly to the employees if you have their email addresses in the BrightPay software. I'll just generate one on screen for you here so you can see what it looks like. So, you know, we do all the work for you here, so all you really need to do is press print or email. And these are all the standard templates provided by the Pensions Regulator there. Okay. I'm then going to just mark these letters as done. Okay, and again, I can mark it as done for one employee or multiple employees. Again, just speeding things up for myself here. Press Continue. Okay, and if I just return to my payroll screen now, you can see then that I've completed my AE duties for those eligible job holders. My next employee is being assessed as a non-eligible job holder. So again, if I click on View Options, I have 4 options for this worker category. So I have an obligation to write to them, telling them that they have the right to opt in. Should the employee subsequently choose to opt in, I have that button there to perform that task. I can postpone or mark as exempt. So again, I'll just say I've done his letter here, and that's my duty completed. Likewise, my third employee here is an entitled worker. And again, if I click on View Options, I've got similar options to the non-eligible job holders. So again, I have the obligation to write to them, letting them know that they can join. Then the Join option, postpone or exempt. So if I were to postpone my remaining employees, I'm going to click on the Postpone button. I can defer for up to 3 months. So I must say I'm going to just, defer them to the start of 2018. I can do that here. And again, I can batch postpone. So if I want to do everybody all at the same time, I can. Okay, and those 3 employees are now postponed. And again, BrightPay will automatically produce that postponement letter for you. And again, once the employees are in receipt of it, I can mark it as done. Okay. If I return to my payroll screen now, you will see all my flags have disappeared. So that means I've dealt with all my auto-enrollment duties at this point. And if I just look at an employee that I did enroll, you can now see that their pension contributions are being applied to their pay slips. We do allow you to override, obviously, you're seeing a percentage here. I can change that at any time to a fixed amount if I need to, or I can add in as well an additional one-off as well if that happened in a particular pay period where the employee or the employer wanted to contribute a little bit more. Okay. Okay, I'm going to finalize my pay period here. Okay. So as soon as I finalize my pay period, you'll see here at the next to my pensions utility, I have the number 2 appearing. And that's now to notify me that I now have 2 outstanding pension files that I need to submit to Nest. So I'm just going to click into the pensions utility here. So Nest, first of all, require you to submit an enrolment submission to them. So I'm going to choose Enrolment Summary here on the menu bar. And BrightPay will prompt you now to send that submission. So as Paul has already mentioned, with Nest, this is an API option, and it just means that you can submit your information directly from BrightPay into Nest. So it avoids having to kind of save a CSV file, log in, and upload it. So it makes it a one-step process rather than a 2-step process. So to send the enrolment submission, I'm going to click on the option at the top here. Because I'm just in a demo company here, it's unable to kind of match my data for me in my Nest account, so I'm just going to turn that message off. Okay, and I just follow the steps through. So step 1, select my employees. Step 2, just fill in any extra information that it's asking me for. Okay. Click on Next, and at step 3, all you're doing is clicking on Send Now, and that will submit your enrolment information to Nest for you. As soon as that is successfully received, the confirmation will come into the top right of the screen for you, so you know that it has been accepted successfully there. Every pay period as well, once your duties have started, you will also be required to submit a contributions summary to Nest every pay period thereon. And again, BrightPay will automatically produce this contribution submission for you. So here I have my first week. So again, all I'm going to do is click on Send Submission. Okay, again, just fill in all the information that is missing on this screen. Click on Next. Again, select your employees, click on Next. If for any reason there's been partial non-payment of contributions in the pay period, you do have a drop-down listing to say why. Okay, click on Next, and again, Send Now, and that's your contributions information into the Nest account for you. Okay, so that process really with the contributions file is repeated every pay period. Okay. BrightPay can also handle opt-outs for you. So once an employee has been enrolled, should they subsequently choose to opt out, then what you just need to do is access the employee's record, choose the employee, and every employee has an automatic enrollment utility button. And here I can now come in and choose the opt-out option here. So I can see here that I'm going to leave the opt-out date is the 8th of October. Press and continue. Okay, and when I return to the payroll screen, and I go into my next open pay period, you can see that any contributions already made to date will be refunded to both the employee and the employer in that pay period for you. Okay, so I can just finalize there as well. So BrightPay will continue to monitor your employees for you going forward. So you've nothing to worry about really. So for example, if I pop into the next pay period, if I increase this gentleman's pay, for example, you can see then that this has made him now an eligible job holder. So it is constantly monitoring your staff for you there. Okay, I know Paul briefly touched on re-enrolment, and it's probably a long way off for a lot of people. You know, we're talking 3 years' time. If I can just show you re-enrolment here, if I just pop back into the pensions utility and into my automatic enrolment screen here, based on your due to start date, we will automatically input what your re-enrolment date is. That means that when you do reach that date in 3 years' time in BrightPay, BrightPay will automatically kick in with your re-enrolment duties for you. Of course, you can change that re-enrolment date to be 3 months either side of your due to start date in 3 years' time, but of course we leave that at your discretion there. So that just about covers everything there. So I'll just pass you back to Karen.
Thanks, Vicky. Okay. So obviously today's demo was a very quick overview of how auto-enrollment works, but if you'd like to book a more in-depth demo, please let us know, and there will be more information on the follow-up email. To finish off our part of today's webinar, so if you wish to offer auto-enrollment as a service to clients, BrightPay's Bureau license includes unlimited employers, unlimited employees, full functionality for auto-enrollment, RTI, CIS, P11Ds, payrolling of benefits, all for just $299 plus VAT per tax year. Some of our newest features also include a payroll journal export to accounting packages, batch processing of RTI, and much more. We are delighted to also say that we have a discount for new customers who will switch to BrightPay for the first year, which is 25% off the Bureau license, which also includes a free BrightPay Connect employer license. So BrightPay Connect is our new cloud add-on that we offer as an optional add-on that you can try for your bureau or for a client. So before I hand you over to John, I'm just going to say if you do have any questions, type them into the question tab, and we'll try to get through as many questions as possible. And just while we're getting set up, I'm going to just show you a 1.5 minute video of how BrightPay Connect.
Good morning, everybody. My name is John Hale, and I'm from Nest. So thank you very much, BrightPay, for inviting me here today. My role for the rest of this webinar, before we get into questions and answers, is to tell you a little bit about Nest, show you how Nest actually operates, but also to cover some of our experiences of dealing with people like yourselves, small employers, accountancy firms, payroll bureaus, and so forth. As Karen mentioned at the start, we deal with lots of these, and through that we've learned a good number of things about how auto-enrollment actually works in practice. So let's go through my slides. So my first slide, well, I'll leave you to read that. I won't read that out to you. I want to talk about Nest and how Nest works for auto-enrollment. So there's a number of features about Nest that is worth going through. You may be aware of some of them. I think that the place to start is that Nest was actually built for auto-enrollment. The UK government, when they introduced auto-enrollment in October 2012, recognised the need to actually have a purpose-built pension provider who would be there come what may. So anybody who needed a pension scheme would actually have somebody that they could go to. And Nest was built for that purpose. But the end result of that means that's actually all we do. We don't sell ISAs, we don't sell bank accounts. We just sell, or we just do, auto-enrollment. That's everything we know. Within that, what we try to do is to build a well-run pension scheme. So pension schemes in the UK have been around for many, many years. We could look at those pension schemes, we could pick the good things out of those pension schemes, the good governance of pension schemes, to make sure that we run it in a way that's efficient, that's good for the members, that's good for the employers who deal with it. I think one of the key features about Nest is that it's an online portal that you use. With so many employers using Nest, it would be physically impossible to do things by paper, to do things through just the post. So Nest has been built so that you can do absolutely everything you need to do by logging on to our online portal, and that enables you gives you a full auto-enrolment backup service for a pension scheme, and it's pretty easy to use. I speak to lots and lots of employers, and most of the feedback you get is, yeah, understand that, and once I've got into it and understood how those screens work, it's a very easy thing to do on a regular basis. Perhaps as reassurance for many people is Nest was established by the government, it is backed by the government. Effectively, they're still our bosses. The Department of Work and Pensions oversees the work of Nest, and we operate within the regulations that the government set up for us. So we can only do what the regulations allow us to do. We're not allowed to do anything else. And again, that helps keep us on track, providing auto-enrolment services for employers and people like yourselves. We are a not-for-profit organisation. That's planned in that we are not aiming to make money out of the people that pay into us or from employers. That's reassuring, I think, from the members' point of view, that we're not there creaming off money from what they've paid in. And as I said at the start, pensions is all we know. That's everything we do. There is nothing else to do that Nest understands. So as far as you're concerned, as far as your employer clients are concerned, Nest is free to use. There are no employer charges. There are no charges for third parties who register with Nest, which we'll talk about in a moment. All of our charges are taken out of the contributions that are paid over to Nest. So from each contribution, we take 1.8%. And then from the funds under management, we have a 0.3% per annum annual management charge. And that doesn't matter whether you're a member of our very largest pension scheme with many tens of thousands of members in it, or a member of a tiny little one-man or 5-man, whatever it is, pension scheme. The charge is exactly the same for everybody. There is no exception to that. Everybody pays the same. We talked a little earlier in this webinar about opt-outs and how opt-outs work. That is a potentially difficult process. The Pensions Regulator is keen that employers and accountants and payroll bureaus and so forth don't encourage people to opt out. So Nest has built a process which means that the employee has to contact us in order to be able to opt out. If they do that, we then tell you that the person has opted out. And they can do that either by phoning us, and they go through an IVR system that asks them lots of questions to make sure that they're the right person and that they really do want to opt out. We explain the consequences of choosing not to be a member of the scheme. They can go on to the Nest portal. We give them an identification code that they can get on, and they can opt out via that. Alternatively, they can phone us and ask for a paper form. They ask for a paper form, the form is then completed by the member and sent back to the employer, and the employer tells us that the person has opted out, usually via a contribution schedule. One of the key things in terms of pension schemes for everybody is that there are thousands, many thousands of employers in the UK. And lots of those employers use payroll bureaus, accountancy firms, bookkeepers to pay salaries, they do payroll for them. Nest recognised this very early on, and we set up something called Nest Connect. What Nest Connect does, it enables a third party, such as yourself, to run a pension scheme on behalf of your clients. So you can set the pension scheme up, and then you can do everything that's necessary to run the pension scheme. But you can choose what you do. You don't need to do everything. You choose what you want to do, and you agree that with the client. You don't need to tell Nest. You just do what you've agreed with the client, with Nest, and the client does the rest of it. As I said at the start, that's free to use for you, so it only takes a few minutes to get yourself set up as a Nest connector. Just go onto the Nest website New to Nest button, and then you'll see how to get yourself set up through that. One of the things that's easily forgotten in the pension scheme, because we often concentrate on the mechanics of running it, is that in the end, what the pension scheme is about is delivering good results for the members who are investing in it. And employers should be reassured by Nest's approach. We do have a unique approach to the way we invest the funds. Every member gets their own default retirement fund. So if you're retiring in 2035, so that'd be your state pension age, then we put you in a fund that matures in 2035, and we manage that fund to get the best possible results from the investments with the least possible risk. And that's a difficult balance to achieve, but we do that through very careful fund management. The result of that is we've got many awards for the structure of the funds that we've set up, and hopefully that would be reassuring to members. And again, lots more about that on our website. How to make auto-enrolment work. I've had a look at a whole range of different employers that we deal with, the feedback that we get at Nest, and the many questions we get at Nest about how auto-enrolment works, and the sort of questions that people struggle with, that get difficult answers, or they trip over. I've got a list of 8 different things that I think are worth thinking about if you are looking at auto-enrolment, perhaps as a new starter, or even if you've been doing it for a while and you want to review where you've got to. We've talked a lot earlier on about duty dates and staging dates, but you'll be surprised at how many people don't actually know their staging date still when you go and see them, and you get a puzzled look. From 1st of October, it's now called a duty date, and it's when you first start paying workers. So there is complications as always with that, in that we talked earlier about postponement. You can postpone somebody for up to 3 months, but you've got to postpone them within 6 weeks of the start date of your pension scheme. So if a new employer is quite late working out they need to go into auto-enrolment, they may not have enough time to actually do the postponement. So the 6-week window might actually bite for them, which means they would have to start straight away. But certainly knowing that you have a staging date, knowing that you started after 1st of October, therefore you've got a date when you've got to start auto-enrolment, is absolutely key. And I think certainly those of you in the audience today who've got many clients can help your clients with that, to ensure that they're aware of it and take the appropriate actions, probably appointing you to help them to provide pension benefits. You need to choose a pension provider. That may seem absolutely obvious, but you'll have various employers who may not need to put any into a pension scheme today. The people they've got may not be earning enough. It may just be one person. But there could be a point in the future when all of a sudden they start to employ somebody very quickly and they need a pension scheme straight away. So even if you haven't set the pension scheme up, it's worth being clear that you know who the pension scheme provider is going to be. And you saw earlier on the BrightPay presentation, there's a whole range of pension providers you could choose using through BrightPay that are supported through BrightPay. One of the features of Nest, we don't charge employers for doing it, and you can set up at any time. It takes a few minutes when you're used to it to actually set a pension scheme up. Many Nest connectors that I talk to tell me 15-20 minutes maximum nowadays to actually set a new pension scheme up for a new employer, provided you've obviously got all the data to hand that you need, PAYE numbers, bank account details and so forth. You need to check that your payroll can deal with auto-enrolment. I still come across payrolls that don't have an ability to send data to Nest or other providers in a format that the provider can read. So they end up having to put data in manually, having to fiddle with it on spreadsheets and so forth, which is fine temporarily, but that's not really a way of going forwards if you've got to do this every week and every month. So checking that your payroll provider can actually deal with your pension provider is a good start. So providing compatible files is one thing to test. With Nest, you need an enrolment file which tells us about new members. So every time a new member joins the scheme, you tell us to an enrolment file. And then once a month or once a week, depending how you pay, you provide a contribution file. And BrightPay and various other providers are capable of supporting that. Typically, until fairly recently, those files were CSV files, which you downloaded from your payroll software and then you uploaded to your Nest portal. In the more recent past, there's a much better solution, and you saw a little demonstration of that earlier. Vicky showed you how our web service transaction works. So if your payroll, such as BrightPay, can support web services, it means you can actually provide the pension data to Nest and other providers without the need to log on to their website to do so. That's a huge advantage, saves you lots of time and makes the process significantly easier. One of the most common things I find is that when data is sent to the pension provider, or whether that's via a web service transaction, the API, or via a CSV file, it rejects because the two things aren't in line. A simple example might be that you have got a weekly payroll and you set up your pension provider to accept monthly contributions. Well, clearly the two things don't match. It's normally not quite so obvious as that, but I have seen that fail for that reason. Often it's just a matter of dates, that if you're paying weekly, you might have a weekly pay period that ends on the Saturday of every week, whatever, and you set your pension provider up so it ends on the Monday of each week. Because the whole system of auto-enrolment is driven by dates, that's a regulatory issue to do with pay periods, then dates are key to get right. And if you got those dates wrong, it's reasonably straightforward to sort them out, but it's worth persevering with it, because if you get it right, then you'll be able to use the automatic transmission process of data straight afterwards. Statutory communications are a regulatory requirement, required by statute. So there are two key communications you have to issue. One is a postponement notice if you're postponing, and the second is a notice to tell the worker that they're either in the pension scheme or they qualify to be in the pension scheme. Earlier on you saw that BrightPay provide those for you, and indeed that's true of many payroll providers. But you need to be clear, whoever you're using, who is actually sending out those statutory communications. It's a legal requirement for the workers to receive them, therefore absolutely key that you know who's responsible for sending them and that they have been sent, and you've got evidence that they have been sent. Auto-enrolment is not just about a one and done process. Every pay period you need to do an assessment of your workers that aren't in the pension scheme, and you need to make sure contributions are paid over. Contribution payments are a serious matter. If they're not paid over by the due date, eventually the pension provider is required to report to that employer to the pension regulator for late payments. And if they report them to the pension regulator, they are also required to write to each of the affected workers to tell the workers that they haven't paid contributions on time. So it's important that a process is built to ensure that everything is done within the required time frames, the letters are sent, members are enrolled, contributions are paid. Really important for your employer clients to be able to give them that reassurance to the services that you provide. So I've talked quite a lot about what Nest is and some of the things to watch out for. And I guess the key question now, does it actually work? Well, I think there's lots of evidence to indicate it does, but perhaps just consider what I've got on my next slide. As of a couple of days ago, when I last looked, we had 466,000 employers using Nest. And they've all started since October 2012. So many thousands of employers being added every week to the Nest system as they reach their staging date or their duty date. We have over 5.5 million members already. So not all currently paying, because some will have paid and left, and maybe they'll come back at some point in the future when they start with a new employer. But we have 5.5 million records, or over 5.5 million records on the system already. We manage £2 billion of funds. That sounds a big number, but in pension scheme terms, that's actually quite a small number at the moment, and that's because contribution rates are quite low. But that number will increase dramatically as contribution rates increase, as time occurs, as more members come in and more monies are invested. And Nest connectors, so these are the people like yourselves who provide services to clients, accountants, payroll bureaus and so forth. Although on the slide there I've got 17,750, I understand when I looked this morning, the number's just gone over 18,000. So 18,000 people providing these services to employers, supporting them in their auto-enrolment. And absolutely essential to the process, to help make the process work for the small employers. There's lots of information available on the Nest website. There are links there on screen. If you go to the Nest website, put in Nest Connect, you'll get all sorts of information, but lots of answers to other questions are there if you search on the website, which hopefully will be helpful for you. So thank you very much for listening, and I'm now going to hand back to Karen, I think.
Okay guys, we're just going to get set up for our questions now, so just bear with us for a couple of seconds. So we have Paul and John who will be taking the questions, and then we also have Vicky who is our support manager on the UK side of things, so I'm sure Paul might throw a few questions over to Vicky there.
I think one of the things I just learned there from John's presentation, I knew about the fact that you had to inform the Pensions Regulator when contributions weren't being paid. I didn't realise that you actually informed the employees as well. Could that be very embarrassing for some employers?
Absolutely. And I think it's a shock when it happens to an employer. You don't want any of your employees to get to that.
Yeah.
Okay, yes, we have a few questions in, so I'll start at the top and work my way down. So the first question is there any way to automate the approved payment step rather than having it as an additional function? There have been occasions where staff have missed this step out and realised when getting the email with the subject, we may report you to the Pensions Regulator, then it kind of hits home. But I don't know, John, if you want to give some background as to what the approved payment does.
Yeah. Okay, so the Nest process for payment is a two-stage process. You load a contribution schedule, which we deem effectively to be a draft contribution schedule. And then once you're happy with that, because you can amend it many times you like, you then click the Make Payment button. And you do the same thing through the BrightPay software in that you can you load the contributions, and then within the software you can instruct payments to be made. It is two-stage. I think the suggestion there is a good suggestion. It's something we've thought about. I don't have a solution today, but it's certainly something we're contemplating with a different way of doing it. I think just a word about the letter. We don't immediately go to report to the pension regulator and write to the employees' workers as soon as you fail to pay contributions on time. You do get a good number of warning letters before you actually get to the final one. So the first letter, I think, sounds like they've got there, says they haven't paid and we may report you, but at that point we wouldn't be reporting you. You've got another 2 or 3 letters before that happens.
What's the time frame? So it's 3 months? Or?
It's 3 months, yeah.
If I just jump in there as well, just with regard to BrightPay, so you can either log into Nest and hit the Make Payment button, and we also have in the BrightPay software the option to approve the payment through BrightPay. We are talking about maybe having a reminder in there. We don't at the moment.
No, we don't at the moment. We're looking at maybe some sort of scheduling. Interestingly, recently I was talking to Pension Sync, and we might end up doing something with them, and I know they do provide a kind of a dashboard or a portal for bureaus where that sort of scheduling can be carried out on that. So that's something we would be looking at as well, if we can't do it ourselves.
Okay, there is just kind of a follow-up question related to what we've just spoken about. So why does Nest not operate a proper direct debit system?
Yeah, okay. Because it doesn't work for pension payroll. The problem with want of a better expression, perhaps a proper direct debit, is that you take the amount of money on a fixed day each month. The payroll may not have been run by that payday if it's variable payroll dates, which happens sometimes with some payrolls. The amounts may not be on the system because they can change every pay period. So typically pension providers do need to have some sort of flexibility in it. We do it in different ways. Nest has got to what it's got to because of having thought through and talked to the payroll industry, and we carry on talking to them and we carry on changing things to improve, make things better. But it isn't as simple as just turning to a fixed direct debit on a fixed day of the month. That would not work for a pension payroll.
Okay, thanks, John. What practical actions should an employer take that has no formal PAYE scheme, but they have casual part-time employees who earn below the lower earnings level, but have no other taxable earnings benefits, and have all signed P46 forms? Should the employer still register with the TPR?
Do you want to take that one?
That's a difficult question.
A pause.
Yeah. So the question, I think, is: are these workers? Are they actually workers within the work definition of a worker? If they're a worker, then potentially they could ask to join the pension scheme, and you'd have to put them in. And therefore you need a pension scheme for them. The fact you haven't got a PAY reference, I don't know enough about how that works to know what the issue is there, but
yeah, I think that there's basically no tax or NIC obligation once somebody is below the LEL, lower income level. So what's the lower earnings level? Is that the lower earnings level? Yeah. So they're not actually obliged to register with HMRC as an employer. I think it's once the income of an employee goes over that level, yes, they have obligations then. I think prior to that, there is no obligation to register with the Pensions Regulator either, because they aren't officially workers on the payroll. It's only when, like the new employers' duties we showed you, once you have workers that are being paid over the LEL, then those duties kick in, and then you know, what happens there is actually you need to register at HMRC. HMRC then does an RT or a feed directly to the Pensions Regulator, and the Pensions Regulator will eventually write to you or email you telling you that you do have duties to perform. BrightPay will obviously, you know, sort of intercept that before that happens, and will prompt you to go about, you know, registering with. Or choosing a pension scheme and starting enrolling employees, etc. I hope that long-winded answer is okay for.
I suppose just kind of talking about those PAYE schemes. Again, I'm aware that small employers who aren't registered with the HMRC under a PAYE scheme still have duties, and the TPR will write to them. But how will the TPR write to them when there's no records, basically?
Yeah. Well, they won't.
No,
yeah,
they won't.
they're off the radar. Okay, one for John. Where a Nest scheme has been registered but then is not required, for example, the employee has left, are there regular returns that have to be made to Nest, or does the scheme just sit there in the background until it is required?
Yeah, so no regular return is needed to Nest if you have no active employees. So if you go into your Nest account, go to Manage Workers, if it shows 0 active employees, you can just leave it there and do nothing with it until such time as you get a worker. But do check, because if you haven't told us somebody's left or hasn't gone through for whatever reason and you've got an active employee, you'll start getting letters about late payment.
Okay, thanks, John. If an employee opts out from auto-enrolment after the 30-day opt-out period, will they still get a refund of their contributions?
Okay, so this is a sort of techie thing. I'm going to fuss about a couple of things there. The first is the opt-out window is 1 calendar month, it's not 30 days. And the second is that an opt-out is a very specific thing. An opt-out only occurs from when somebody's enrolled, and you get 1 calendar month to opt out. If you opt out, you get a refund. After that period, this is me being very pedantic, it's not called an opt-out, it's called a cease. You are ceasing to be a member or choosing to cease to be a member of the scheme, and if you cease to be a member of the scheme, you get no refund. The money just stays invested in the scheme. And of course, both groups of workers, whether you opt out or you cease, at the 3-year re-enrolment point, they both have to be put back into the scheme if they're still being employed by that employer.
So the money that the employee and the employer have put into that scheme that just stays there?
Yeah.
Is that the same with all pension companies?
No, I think this would be for a true auto-enrolment pension scheme. I think if you're in a qualifying pension scheme, there are short service refunds and it gets messier.
Okay.
Just a general question, what is relief at source?
Okay, yeah, good question. So there's two types of tax relief for employee contributions. One's called relief at source, the other's called net pay, and they're very confusing. Relief at source means that if your pension contribution is, let's say, £10, the employee pension contribution is £10, you deduct £8 from net pay. So £10 less the basic rate tax, brings you down to £8. When the pension provider gets the £8, we claim an extra £2 back from HMRC to add to the account. So we're getting the basic rate tax relief. The other means of getting tax relief in pension schemes, which Nest doesn't operate, but some providers do, is you deduct the £10 from gross taxable, and you therefore reduce the amount of tax you pay, and that's called the net pay arrangement. But generally for auto-enrolment, it's seen that relief at source is a better solution, because if you don't pay tax, you still actually get tax relief.
It's actually interesting. When the last workshop I was at for the Pensions Regulator workshop, they discussed the complications that may occur with the Scottish rate of income tax.
Yes.
And that being it could possibly be a different basic rate, and in fact it could happen the same in Northern Ireland and the same in Wales. That basically could be different. It mightn't necessarily be 20%, it could be 19%, it could be 21%. But I mean, I think the payroll will automatically pick that up anyway with a Scottish rate of income tax, depending on the prefix to the tax code. So it'll happen automatically with payroll. I think it's more an issue for you guys, John, that, you know, how do you administer that in your own schemes?
Yeah, horrendous. Yeah. I've seen the specs for it, and it's really difficult, but we're changing our systems at the moment to deal with it.
Okay, just a BrightPay related question. So can old and existing data be transferred to BrightPay from another software? And is there any help available?
Well, Vicky, you're probably best one at dealing with that. Yeah.
Yes, of course. We do have, I suppose, dedicated import options for the likes of Sage, Iris, MoneySoft, HMRC Basic Tools. I think that's
the Basic Tools is probably the best one in that it's such a seamless import. It's a one click nearly.
Less than 30 seconds. Yeah. So there's certainly, that can be done. We have dedicated, I suppose, video tutorials and online documentation. And of course, you know, if you rang the support line, we'd help you with that as well. Okay. If you forget your Nest login details, how can these be retrieved?
Yeah, so if forgotten password, there's a forgotten password button on the login screens. If you can't remember your username, in 90-ish% of cases, it will be your email address. So put your email address in and do your forgotten password, and that will sort you out in most cases. If you've forgotten both, then you have to call our call centre. And there's a name, that orphan account, I think they call it, something like that, they use to deal with it.
Okay, if an Irish company has an employee from Northern Ireland, are they required to comply with auto-enrolment?
Well,
Probably.
I'll have a go at that. We actually have that same scenario in our own company, but what we do is we actually have a separate UK PAYE registration, even though it's an Irish company. That's okay to do, and through that payroll, then we will look after the employees that are hired that are resident in Northern Ireland. So because it is a UK PAYE, we still have obligations to stage and to auto-enroll those employees. And I think it's fine and that's also fine from the UK point of view as well, because once those employees actually have national insurance numbers, they can be accepted within any auto-enrolment pension scheme. But yeah, let's say just to recap there, we don't actually have those employees being paid through our normal Irish payroll. It's a separate Irish payroll, but with a UK registration that we handle that with.
Okay, thanks, Paul. Is there anything an employer needs to do on Nest when the PAYE scheme ceases?
So similar to the last question, really, is to make, or an earlier question, really, is to make sure that you tell us that the employees are ceasing. So you do that via a contribution schedule. You tell us the employees ceased. So you cancel the employee records on the Nest system, cancel the future expectation of contributions for the employee records. And if that happens, that's the end of the, for those employees, and the account is just left there. If you don't need the account, you can go into the admin section of the Nest website and you can notify us you wish the account to be closed, and then that's it. But if you didn't do that, it sort of doesn't matter. I mean, it's tidier if you do, but if you didn't, it's not the end of the world.
Thanks, John. What would happen to a pension pot if the employee dies?
Okay, so when a new member is enrolled onto Nest, when you send us an enrolment file, we send them a Welcome to Nest pack, which gives them the information that they need in order to be a member of the scheme. They're a member anyway, but the extra things we need. So one of the things we ask them is, what happens to your benefits on death? Who do you want us to pay them to? So they complete a nomination form. If they don't complete the nomination form, the benefits are payable to the personal legal representative of the estate. So generally the benefits are paid out as a cash lump sum. So that whatever the value of if your pension pot is worth £10,000, whether you take it as retirement benefits or if you die and it pays as death benefits, we still pay £10,000. It's the value of your pot that's paid.
Thanks, John. And the last question what do you do if an employee starts working for you and they were already part of a pension scheme with a previous employer?
It sort of doesn't matter that they were a member of a previous pension scheme. You as an employer, or the employer, has a duty to provide an auto-enrolment pension scheme for anybody who qualifies for it, when anybody chooses to opt in to the arrangement. You have to have a qualifying pension scheme. So basically you shouldn't worry about where they've been in the past, what else they've got. It's your duty as an employer to put them into the pension scheme. So you just need to put them into your scheme, and if they don't want to be a member, they opt out. But most generally don't. Opt-out rates are very low. And
just on that point, John, is it mostly the case that if they were with a previous pension provider, that the pot as such can be transferred?
Yeah, so it's a good point. They're quite able to transfer a pot from a previous provider into Nest, or indeed they can transfer the Nest pot onto the next pension scheme provider, and that's a member's decision. So when in that pack of information we send the member, we tell them how they can do things like that, and they can do that via the online portal.
Just one more question that's just come in there. So would there be any auto-enrolment duties for a company based abroad with no UK PYE, but they do have a UK national contracted to work in the UK who's paid directly?
Oh God, I'll let you take that.
Well, I still understand why it's being asked. It's a difficult question, but essentially anybody who's deemed a worker in the UK, so typically that's somebody who is earning UK money and is taxed in the UK, is going to need to be in a pension scheme. So we've got quite a few pension schemes for overseas companies who have workers in the UK. But it is just, I keep using the expression worker, and that's because it's sort of, that's what you do in auto-enrolment. If you go onto the Pension Regulator's website, there's some detailed guidance about who qualifies and who doesn't qualify, and I think it's probably better you look at that rather than me trying to guess, because there are a number of questions you would need to know the answers to. Worth going onto it and reading it, particularly in those circumstances where some may need to be in a scheme, some may not need to be in a scheme, depending on their circumstances.
Okay.
Thanks, John. So that's all the questions. So.
Okay. Yeah, I think we'll wrap it up then at that. And again, thank you very much for joining us this morning, and thank you, John, for coming over to us and helping us with this, and Vicky for delving through those questions, and Rachel for making sure everything works, and Karen for comparing. So thank you again.